Good morning, everyone. Apologies again for that technical issue. As folks filter in, just want to say a quick welcome. My name is Nina Gruber. I'm with Local First Arizona. My colleague Robin and I are here as representing the Arizona Economic Resource Center, and you are attending our board management workshop, which is part of our Grant Basics workshop series, in which we are going over some of the different skills that we've seen bubble up as needs across the community here in Arizona. And so we have a wonderful expert to give us her guidance on this in Lisa Lombard. And I will let her introduce herself, but all the same, just want to welcome you all here. As far as logistics goes, for the meeting, if you do have any questions or anything, feel free to drop those in the chat and we can address those. There are several points throughout the presentation in which you can ask those questions and Lisa will address them. And otherwise, we will be just here just to move forward and give you a great board management here. We will be sending in the recording and all of the additional materials like the worksheets that Lisa will be referencing. Those are available on Humanitix, or they should be, in case I will double check that those are there. But then we will follow up with those materials as well, and they'll be available on our local learning lab. With that, I'll pass it off to Lisa. Thank you again for being here.
Good morning, everyone, and thank you, Nina and Robin, for putting this together. And thank you all for taking time to join us today. And thank you for your service in our community. So I'll give you a little bit of my background. I started out as an auditor for not-for-profit organizations. And after 25 years of auditing them, I decided it would be fun to be on the other side and help them prepare in advance. And so I also was seeing some issues that were recurring year after year. And I developed some training programs for governing boards and management to help address some of those issues. So I've also, you can see my qualifications up here, and I speak at the Arizona Society of CPAs and Arizona Community Foundation and other places as well, and served on boards. And after one of the trainings, a lady came up to me and she said, "I've been serving on boards for 30 years, Lisa. And I sure wish somebody would have told me this back then." And I wished I'd known some of this stuff back when I started. So our agenda, we're going to cover some of the board basics, and then we're going to talk about roles, responsibilities, and expectations, and that's both of management and boards. And we're also going to talk about the differing roles, which is one of the big areas of contention, and effective use of committees and building a strong board. And my contention is starts at the beginning at recruitment, and we'll have some takeaway action items for you. So polling question number 1, please indicate if you are attending today as not-for-profit management, not-for-profit employee, not-for-profit board member, local government, council member, local government employee, or not-for-profit or local government service provider, or other. From the registration initially, it looked like about 50% of you were from not-for-profit organizations, and about 29% from local governments, and a smattering of others. Oh, we have quite a variety here today. So we've got not-for-profit management, we've got not-for-profit employees, not-for-profit board members, no council members, but we do have local government employees. Well, excellent. Thank you for your interest. Okay, so if you are from a not-for-profit organization, how long has your organization been in existence? And you'll see later on why this is important. Ooh, some of you have been around, your organization's been around for quite a while. Some of them are pretty young. Okay, and some of you don't know. Very good. Thank you. So we're going to go over some of the basics. And let's start out with terminology. And some of you may have had this question yourself. What's the difference between a nonprofit and a not-for-profit? Well, a nonprofit operates for the betterment of the public and the community at large, and not-for-profit is not an official term, but it's often used for social welfare organizations. The IRS does not address not-for-profit. The only 501c3s are nonprofits, but both of them have a common goal of providing benefits to the community as opposed to making stockholders more money. And so many in the accounting profession would actually like to see both of these terms eliminated because it's not, there's a joke out there that says nonprofit is a IRS classification, not a business plan. The nonprofits need to make money. So we would like to see both of them go away. Some other options are social impact organizations, community impact organizations, and tax exempt organizations, although that is a bit of a misnomer because even tax exempt organizations, nonprofits, still pay taxes. But the Alliance of Arizona Nonprofits actually changed their name to AZ Impact for Good. And hospice, I think it was Hospice of the Valley, talks about, we're not here for profit, we're here for comfort. So board governance. Talk about board governance, and that is why the board exists. Well, the board exists to act as a representative of the public or the members, if you are in a membership organization, and to govern the organization and to hold the big vision. And the board's roles are governance and support. And as we get into the details later here, you'll see why that's important. And this applies to local governments as well. So the standard not-for-profit structure, you notice what's at the very top? Community members served. And then you've got your governing board, and then you've got management below, and you'll see arrows going both ways. Information has to flow both ways between those. And one of the effective ways of running a board is the use of committees. And so you have two types of committees. You have standing committees and ad hoc committees. And standing committees are typically listed in your bylaws, and the ad hoc committees are, oh, we have a special project and we need to put together a committee to do some research on this project. And then once the project's done, the committee dissolves. In the internal operations structure, you've got typically your executive director, and then maybe a director of operations and a program director, and then maybe facilities, finance, housing, job, and your programs. Not-for-profit in organizations in Arizona, you have to apply with the Arizona Corporation Commission. I actually, at a business meeting the other day, I had a lady come up to me and she said, Lisa, do you know of any nonprofits I can buy? And I'm like, no, you can't buy a nonprofit. So you have to apply with the Arizona Corporation Commission. They have a perpetual life and annual filing fee, online renewal, and updating. And I recommend signing up. They will send you an email reminder for your renewals. And if you're serving on a board, remember your name will be included, at least includes the officers and 4 of the members. And you will need articles of incorporation to submit to the Arizona Corporation Commission. So once you have a corporation, it does not automatically make you a nonprofit. The IRS determines which classification of nonprofit, if any, that you qualify for. So you have to apply for your exempt status. The only ones that are exempted from that are religious organizations. And I noticed we did have a few people sign up from churches. And you do still, they file your annual information returns, Form 990, which churches are also exempt from. And religious organizations are exempt unless they have taxable activities. I used to do the annual review for a church that had a bookstore, and the bookstore was open during the week and available to the general public and could readily be seen. And so they always reported their income from that bookstore on the 990T. So bylaws and board policies, this is how your organization is governed. In Arizona revised statutes, they have minimum things that are required to be in your bylaws. So the Arizona Nonprofit Corporation Act says what should be in there, and it's really very basic. About how and when board members and officers are appointed and elected and grounds for removal, general duties of the officers for each individual office, number of officers, what's a quorum? That's important. You need to know what's going to be a quorum in your meetings, and basic requirements regarding annual meetings. And additional requirements. This is something I did not know when I first started auditing in the not-for-profit industry, that in the event of a dissolution, all remaining assets must be donated to another 501c3 organization. You can't just disperse them among the employees. They have to go to another 501c3. And the reason you want to know about that removal is I served on a board where we actually had to remove what they call a rogue board member who went behind our backs and did some actions that were not authorized by the board or by management. So bylaws versus policies and procedures. I noticed some of you have been on, your organizations have been around for a long time. And what can happen is over time you have multiple, your boards change over and people go, oh, we need to update this, we need to update that. And that's great. But you want to make sure they're not consistently adding more things into the bylaws that really belong in policies and procedures. So the bylaws are the rules that govern the internal management of an organization, the corporation, and that includes your mission statement. And like Arizona requires, you want to address how meetings are conducted. And you want to, like we said before, define your quorum, determine number of directors, and a majority is needed to amend the bylaws. And the bylaws should also address how directors are elected and what officers the organization will have and their duties, just at the high level. You don't get into the details in the bylaws. Bylaws are very basic and keep them simple. Now, one of the things I ran into a lot in my auditing career is these template bylaws that clients were using that required an audit. Well, some of them were too small. they didn't realize what the cost of an audit was. And so make sure if your bylaws say that you require an audit, that you are getting an actual audit, independent audit every year. But in many cases, you may only need an independent review, which is a little less expensive. Um, and then also it should state what your standing committees are, and certainly legal and financial transaction authority, and just at a high level, your investment policy. And if you're a membership organization, you want to see how it's defined as members. So tips and warnings. Do not make bylaws more specific than they need to be, because there's a risk of violations for something minor. If there's specifics, put those in your policies and procedures. And as the organization grows, review the bylaws at least every 3 years to ensure they're up to date. And I currently are serving on a committee, and we are reviewing the bylaws and our board policies, because with modern technology, changes in the economy, and all kinds of other things, we need to make sure that we're up to date on everything. And if you're going to do any substantial changes, make sure that you have an attorney sign off on that. And if the bylaws are not upheld during a dispute, board members could be held liable for breaching their duty to the organization. And you want to avoid reactionary changing, like something happens and go, oh, well, we're going to change our bylaws. We won't do that anymore. And then you find out later, well, we need to change it back again. That's not what bylaws are for. Bylaws are your basic foundation. And they should be broad enough that there's rarely a need for an emergency legislation. So samples of what belongs in the bylaws, and we kind of address some of these: elections of officers, conflict of interest policy, whistleblower policy, record retention. Typically the minimum number of meetings is in your bylaws. You may decide you want to meet more often. I know a lot of my clients during COVID, they were meeting way more frequently just because they needed to be there, because things were changing so fast. And also with virtual meetings are allowed, email voting, those types of things, and any other sanctioned procedures and board rules. So policies and procedures are more specific than bylaws, but don't make them excessively specific. Remember, they'll be used by future boards, which may, for example, not want to meet on the fourth Wednesday of every month in a certain room. Because boards are going to be rolling over, so you don't want them really specific. So some action items for you folks is to make sure your organization's board policies are updated to address. And this is a big one: gift acceptance. With Bitcoin coming into play, the general trend in the industry is most of them, if you accept Bitcoin, it's recommended to cash them immediately. And you also want to make sure that you have your policies, the ability to decline gifts that don't benefit your mission. For instance, I had a client that was given a vehicle that they could supposedly use in their mission, and the cost of repairing that vehicle was greater than what they could sell it for. So they ended up they couldn't use it. So you don't want to be stuck with something that you can't use or that you're going to be having to maintain. And internal financial controls. And this is an area where, you want to make sure they're updated for current processes. For example, I'm the treasurer on one board, and we're going through and we're updating the board policies, and it says we're supposed to look at all the canceled checks. Gets canceled checks anymore? Nobody. So you want to make sure that your policies are up to date for current technology. And a lot of organizations are using online bill pay or bill.com. And so they're having different controls in place. And a board assistance might be needed for segregation of duties if there's not enough paid staff. And that's a common challenge with smaller not-for-profit organizations. And for instance, me as the treasurer, I have to, I'm one of the approvers on bill.com for the payments. Myth number one. This started when I met with a lady who had called me up and she said, Lisa, I've just been hired as the CEO of this not-for-profit organization, and I think we have an issue. The founder and donor own and are responsible for control of the not-for-profit organization. That is not true. No one owns a not-for-profit. It's a public entity which has been granted tax exempt status by the IRS, who can also take it away. So if somebody is converting from a private business and then they have a not-for-profit, maybe in their private business, they could pay their own bills out of their company. That's their problem. But in a not-for-profit, you can't do that. No one owns it. And like the lady that asked me, can I buy a not-for-profit? I was like, no, because it's not an entity you can sell. Now they can merge and do lots of other things, but no. So a board member is a steward of the mission of the organization on behalf of the membership and the community it serves. And stewardship means the responsibly handling of funds that are not your money and providing reliable financial reporting to the stakeholders. So remember, stakeholders are going to be those you are serving, your grantors, donors, lenders, etc. So governance has been defined to refer to structures and processes that are designed to ensure accountability, transparency, responsiveness, rule of law, stability, equity, inclusiveness, empowerment, and broad-based participation. And this definition is from the United Nations Educational, Scientific, and Cultural Organization. So remember in the beginning, I asked you about how long your organization had been around. And this is why, because how the age of your organization and where you are in the life cycle will impact how you do your strategic planning and what your board type is. So a lot of times smaller not-for-profits may start out with an idea or a single person. They go through the startup stage, they go through growth, maturity, and then maybe they kind of stagnate and either they can go terminal or they can turn around. So the different types of boards are based on the organization's life cycle. And so operating founding board and is your startup usually. Governing board is when they're more mature, and institutional primarily applies to hospitals and universities. And this particular there are multiple models for this, for your different types of boards, but this particular model is from Board Source. So characteristics of an operating board. So say you're a new startup and basically you've got the founder and some family and friends, and maybe the founder's also being the CEO, and maybe you just have, one contracted bookkeeper or something, and board members do administrative and maybe some of the service program functions. Whereas characteristics of a governing board is the organization's been in existence for several years. Daily operations are usually handled by a CEO and employees. The board provides higher level oversight, and the board approves strategic direction. And separation of powers of this is important because you've got your legislative, which is your board of directors, and your executive, which is the chief executive officer. And some organizations call them executive director. It's just a naming. But the key point here is that operating boards operate at the high level. Governing boards operate at the 3,000-foot level. And the board needs to focus on the big issues and not the mouse in the corner. And I was talking to one CEO, and she was saying yes, and we've gotten away from our board meetings discussing what colors the napkins should be at the annual fundraiser. It's like, that is not a board issue. Let the committee take care of that. Don't waste valuable board time on that. Based on what you just learned, what do you think your organization's board would be classified as on the spectrum? Operating board, transitioning from operating to governing, or governing board, institutional, or not applicable to you? Give you a few minutes to answer those. Okay, so quite a few of you still have some operating boards in transition, and some organizations may be in transition for a long time, and quite a few governing boards. Oh, I got a few institutional ones and not applicable. Okay, great. Thank you. Okay, so roles, responsibilities, and expectations. I wish somebody had given me this when I first started on a board. I started on Kiwanis board many, many, many years ago, and I had no clue about these things. So the primary things, and you'll see this in every legal presentation, is you've got a legal duty of due care, and a legal duty of loyalty, and a legal duty of obedience. And we're going to primarily focus on the due care here, but loyalty, we're going to focus on that because that's why you sign one of those a disclosure agreement. But primarily what you want to focus on is taking care of the nonprofits, ensuring protection of the assets, including facilities, people, goodwill, and all of those things, and make decisions in the best interest of the not-for-profit and not in your own self-interest, and ensure that the nonprofit obeys the applicable laws and acts in accordance with ethical practices. So duty of care, protecting assets. So one of the biggest things in the seminars I've been attending lately that's a challenge for nonprofits is data. They have to be protecting their data. If you've got medical files, even donor lists, things like that, you want to make sure you've got adequate protections on your data. Certainly you want to protect your cash and investments and your reputation, and make sure your volunteers are safe. Physical and intellectual property, again, that needs to be protected as well. So the board is also supposed to effectively communicate to management the strategic plan and the priorities, and review and approve a budget that's consistent with the strategic plan. And this is something I always like to emphasize, because if the board says, well, we want to do more outreach and we want to get people to come in from this community and that community, you got to allow for more money in the budget to do that outreach. So you need to make sure that if you're trying to expand something, that you're also allowing the budget to match your strategic plan. and secure adequate resources for the organization to fulfill its mission and assure sustainability. And that's critical too, because the board does have a responsibility in assuring sustainability and assuring that proper financial controls are in place. Obtain and review timely financial reporting from management. When they give you those reports, you need to look at them and identify risks and assure that management has the resources to address those risks. So, management may say, oh, well, we have to upgrade our software because, we're subject to hacking and we're vulnerable, and that's going to cost a lot of money. So you need to assure that management has the resources to address those. The other thing is on timely information. I was once sent out to do an audit on a water district, and they hadn't had their bank reconciliations done in 3 years. How can the board make decisions when they don't even know what the bank reconciliations are? So myth number 2, our caring, dedicated employees and volunteers are trustworthy, so we don't need to worry about internal controls and fraud. Wouldn't that be nice? So not-for-profit organizations are actually more vulnerable to fraud, primarily for lack of resources, for outdated, they need updated technology, or for adequate staffing, poor internal controls, inadequate training, high turnover with low employee investment, poor technological resources, misconception that no one would steal from a spiritual or charitable organization. And believe it or not, is still out there. But the challenge I see most often is the attitude and the misunderstanding. When people give you money, they want to give it to you for a specific program. They don't realize that you have to maintain overhead to have controls over those programs. So the most important component of not-for-profit leadership's fiduciary duties over safeguarding of funds. And the purpose is to ensure accurate and timely financial reporting. And one of the key concepts is segregation of duties so that no one individual has control over a function, such as payroll, cash receipts, billings, accounts payable, independent reviews, independent reviews and approval documentation. And remember, these are the organization's responsibility. It's not the auditor's or the reviewer's responsibility. So you need to have your systems in place. And fraud by its very nature is not designed to be found. So just because you had a clean audit last year doesn't mean, okay, we're good. We can merrily go along. So board of directors are often used for check issuance or third-party payment approvals, like I mentioned before. As a treasurer, one of the boards I serve on, I think both the treasurer, the president, secretary are signers on the checking account along with the CEO, just so we have enough people. But you can't just sign them. You got to actually look at the invoices. And the board's supporting role. The board really is supposed to support management, support the revenue strategy, fundraising, donating. See if I got a cough, see if my mute works here. Did that mute work? Did that mute work?
It didn't, but that's okay.
Oh, it didn't?
We understand that you've got to cough sometimes. It's all right.
Sorry about that. So the board supporting role is to advise management regarding decisions and supporting the revenue strategy and in fundraising and donating and volunteering on projects and being an ambassador for the organization. So this is a standard expectations of board members: attendance at the meetings, timely, and financial support. And I was really surprised when I was talking to one CEO, and she said that not all of her board members even donated to the organization. I'm like, what? If you believe in the mission, you'd certainly want to donate to it. And respectful participation in the meetings and utilization of the skill set that got you on the board. So staying abreast of organization industry trends. And there have been so many changes in the not-for-profit environment recently. And be an ambassador for the organization. I went to a seminar one time and they said, you should be bragging about what your organization is doing at least 3 times a day. And I'm like, whoa. And confidentiality. What you discuss in the meetings is confidential. So check your organization's bylaws and policies for additional expectations. For instance, I have a client who helps women and get back into the workforce. And one of the things their board members have to do is help the women select outfits for that are hired, select 5 days worth of outfits for that job. Because they actually, it's called Dress for Success, and they actually help clothe people that are getting back into the workforce. Volunteering at events. And we were volunteering for Habitat for Humanity event here. Now, what should the board expect from management? Well, obviously you can't make decisions if you don't have accurate and timely information. And board training and industry updates, because things change in the industry. And certainly you want management to be attending board and applicable committee meetings and board liability insurance. So polling question number 4, when you joined your organization, were you provided with evidence of board members' liability insurance? Oh my goodness, a bunch of you weren't. Okay, or not started yet. Okay, and some of you were. 62% were not. Okay. Well, that's something you can go back and ask. So what the board should expect from management, certainly accurate and timely information, and you want to get enough information to make a good decision on items that require a board vote, such as a major purchase that's over the procurement threshold or unbudgeted items, board member replacement, and closing facilities. I mean, those are all things you're going to want information from management on. You're also going to want summary level financial statements. And I know I'm a CPA and I got an accounting background. I'm not going to go into the detail here, but do a whole separate section on how to read these financial statements because they are different from private industry. But you want you at least want to know your statement of financial position, see prior and current year, your statement of activities, which is prior, it would be nice to see prior and current year so you can see how it's trending, and revenue and expense budget and actual comparisons, and a nice dashboard of highlights. And more and more boards are asking for this. Give us the main numbers and provide in time for the board to make decisions. So on monthly or quarterly is typical. So if they're giving you dashboards, make it like 2 to 3 financial indicators, maybe a key service indicator, and significant trends. And this is something, if you're new on a board and you come in mid-year, some organizations, especially churches, their revenues go down in the summer here in Arizona and go way up in December. So if you suddenly see a decline, that's normal in July and August. So those are the types of things you want to know about so you're not getting all excited about it. And here's a sample dashboard. And you can see this one has year-to-date net income, total expenses, surplus, months of cash on hand. A lot of organizations want to have a policy that says we will always keep 2 months of cash on hand or 3 months of cash on hand, so that they watch their expenses and make sure that they have enough in case something happens. And the ones that did that were probably the ones that made it through COVID. So that's something a lot of organizations like to see. Then you might want to see budget versus actual. And some of them like to see their revenue sources. They know that they should have a certain mix. Now, if your not-for-profit organization is based, you might have a mix, say you do fee for service and you have donations, you might want to see a mix in your revenues for that to see how much of it are we getting on fee for service and how much of it is from just straight unrestricted donations. Some organizations have restrictions too, and want to see that difference. Any questions pop up in the chat so far?
Nothing has come through just yet, but if anyone has one, they're welcome to unmute or can type it into the chat, whatever you prefer. Okay, I guess we can move on.
Okay. Governance versus management roles. This is the main reason I started my consulting practice. This came from daring to lead a national study of nonprofit executive leadership, where they say, for me as an executive director, the biggest angst is finding board members and their ability to understand what their role is in leading the organization. The most frequent calls and complaints I get are, Lisa, my board is trying to micromanage my work. Lisa, my board is interfering with what I'm trying to do. And it's not because they're bad people. It's because they're on the board and nobody told them. This is your job. This is the executive director's job. So it's critical to stay in your lane. And the separation of powers between governance and management is a good thing, because the not-for-profit board's role is to determine mission and purpose, make the big decisions, mergers, moving, closing offices, and to ensure effective planning and approve the strategic plan and priorities, protect the assets, and protect your select the chief executive officer. That's their job. Support and evaluate the chief executive officer. And I serve on an executive committee, and I called some other related organizations and said, when was the last time, that you evaluated your CEO? And they said, we haven't done it in 25 years. I'm like, oh, because I was hoping they would have a nice process for me. But that is the responsibility. They should be doing it annually. And ensure legal and ethical integrity. We talked about that earlier. And this is an interesting one. Build and sustain a competent board. So it's kind of interesting. The board is responsible for building the board. Now, in reality, management should be bringing in trainers or specialists as needed. But you want to include an annual board self-evaluation and be an advocate and promote the organization in the community. And we talked about that earlier, about talking about all the wonderful things your organization is doing. So I kind of laid these out on this slide so you can see on the left-hand side that the board establishes missions and then management implements the mission. The board sets policies and management implements the policies and enforces them and verifies control. The board verifies internal controls are consistent with the objectives, and management establishes internal controls consistent. And like I said before, the board hires the CEO, and management hires all the other employees. And I can't tell you how many times I've had CEOs come to me and say, my board president told me I should hire so and so. And I'm like, that's not the board president's job. That's what they're paying you to do. And adopts the budget. Now, typically management prepares the budget because they're going to go around to all their departments to get the information and to what was spent in the prior year and what they, how many people they anticipate serving or whatever in the upcoming year. And this is just a kind of a sample. And here's the issue. Board members should not cross the boundaries because you can't take off your hat. If a board member goes up to an employee, and I had a case where this happened in one of my audit clients, and says, you need to write a check for X number of dollars to so-and-so. The employee's not going to say no to a board member. However, that was in violation of their ordinances and internal controls. And the board members should resist micromanaging. And I have one poor CEO, she called me, she said, Lisa, the board treasurer calls me every morning asking me how much money's in the bank. They had over $1 million in the bank. Their expenses were not that high. They were fine. There was no reason to do that. However, the board should perform annual evaluation of management and report back to management on a timely basis, and do require timely accountability from management. And the single, yeah. And I did actually see a CEO leave because of the board interfering so much that they couldn't continue their function. So you were sent out worksheets, and this one is worksheet number 1, who is ultimately responsible. And so I'll give you a few minutes. Bear in mind, we're talking here about who is responsible, not who's going to participate. If the board has to do something like in a strategic plan, they're going to work with the CEO, but and on budgets and things like that. Obviously, they're going to talk to the CEO before they move to another city. They're going to talk to the CEO before they do some other things. But this is who is ultimately responsible. And can they all access their worksheets?
Yes, they all have access to the worksheets on the Humanities page, and I just sent it in the chat as well for folks.
So we'll give you a few minutes to fill those out, and then I will go over the answers. And if you have any questions, we can address them. think we have enough time?
I think so.
So do you want me to go ahead?
Yeah.
Okay. So who ultimately determines expansion into another city? That has to be approved by the board. Obviously, they would talk to the management about it. So that could be a both, but it ultimately, the decision has to be the board. Chief Executive Officer succession planning, that is the job of the board. And what I run into is a lot of times they think, oh, we'll just hire somebody real quick. It doesn't happen that way. You need to allow a lot of time for it. Hire a director of operations. That would be your CEO's job. Provide timely reporting to the board. That would be this management's job. Annual evaluation of the board. It is the responsibility of the board, and certainly they would want to get the input from management, but it is their responsibility. Terminate a staff employee, that is the responsibility of management. Review and eliminate and evaluate the CEO on an annual basis, that is the responsibility of the board, usually done by the executive committee. And preparation of the strategic plan, typically it will be worked on together with both management and the board, but ultimate adoption of the strategic plan is the responsibility of the board. Approval of the budget. Management usually prepares the budget. It is the responsibility of the board for adoption of the budget. Receive and handle complaints from an employee about a CEO. That would probably be the board, because you can't have the CEO handling that themselves. And authorizing the sale of land and buildings, that would be the board. Here's a bonus question. Who can be named in a lawsuit against the organization? Everybody. And I've served, when I served on the Arizona State Board of Accountancy, I got a notice from a disgruntled accountant that decided to sue us all. I hope everybody did well with that. Okay. I'm going to go ahead and move on to effective use of committees. And then if there are questions on this section or the previous one, we will cover them then. So one of the big things, nobody wants to be in long, drawn out board meetings. And the effective use of committees is the best way to get the details taken care of outside of the board meeting. And the committee is defined as a group of individuals that cannot act apart from a larger group. So the committee must have special directions from an assembly like the board to take action on its own. Typically, committees are strictly advisory. I serve on a number of committees, finance committees, and we just, say, we recommend the board do such and such, which the board may or may not do. The purpose of a committee is to accomplish a particular task. And for instance, I served on a building committee. And so we had to meet with the architects and engineers and things like that, rather than having the whole board do that. Once you do that meeting, though, you need to submit your time, submit your results and assessments to the governing board. And like I said, the board may or may not act on it. They may decide there's something else they want to go in a different direction. And I personally serve on a number of committees like this in an advisory capacity. And this is really great for some of you smaller organizations that want some expertise, but maybe don't need somebody full on your board, but you want to bring them in for a special project. It can be very helpful. The executive committee considers matters of a sensitive nature, and it's made up of the officers. And professional advisors can be brought in upon invitation. And the committee has to select a chair if it's not already in your bylaws. and make sure everybody knows what the goals are and have an agenda for every meeting. And when as an auditor, I used to review meeting, we had to review meeting minutes. And one of the things I noticed is that they're really good about keeping board minutes, but not so good about keeping committee meeting minutes. Any questions on those two sections?
It doesn't look like it, no.
Okay. So building a strong board. And I love that Arizona Economic Resource Center puts these trainings together, because this is so important for building a strong board, is for them to know what their job is, because how can you do a good job if you don't know what your job is? So there's some keys for building a strong board. And one of those I've mentioned before is an annual board self-evaluation. And Board Source is a wonderful resource for that. And education and enrichment for the board, effective board member terms. I have a lot of people ask me, Lisa, how long should somebody be on the board? Well, if they've been on for 25 years, it's probably too long. If they've only been on for 1 or 2, then it's probably not long enough. But most boards that I see, they actually have a rolling thing, so that you have maybe 10 board members or 9 board members, and 3 come off each year. So you've always got some people with historical perspective, some new thoughts, and you've got continuity that way. And recruitment is a critical key. Setting expectations at the recruiting level. So prior to recruiting a new board member, perform a SWOT analysis. Look at your board's strengths, weaknesses, opportunities, and your threats. And nowadays, not-for-profits are having a lot of threats that they need to consider. And also look at the areas of expertise, your diversity. Where is your organization in its life cycle? And look at your strategic plan. Don't just go grabbing people and say, hey, you want to be on our board. Make sure that you decide what it is you need on your board, and setting the expectations. And one of them is the nominating committees oftentimes will be looking for diversity. And I went to a seminar one time on diversity in the not-for-profits, and the lady said, diversity is not a gender nor a color, because diversity also includes backgrounds, experience. You don't want a whole board of people who are afraid to spend money, but you don't want a whole board full of people who are big risk takers either. You want some balance in there. So what is their tolerance for risk, their skill sets? So I served on a board once. I had 3 attorneys on it. And it was not a board for attorneys. But anyway, you want to make sure, what is it you need on your board? What are you representing your community? Do you representing the demographics that you're serving? How about people with community connections? And where are the candidates in their life cycle? I know it's really maybe hard to get, young parents on boards, but if it's a board that's serving an organization that's serving children, you might want to make it so that they can participate and give feedback. So a sample nominating committee, this is a process that nominating committee members that I've actually been through. They review, they send out packets, and the committee meets and discusses the appropriate to see who's qualified, and they schedule interviews with those applicants selected as good candidates, and you vote on those, and then you can make recommendations to the board, so saying, we have interviewed these people and we think they would be a good fit. So new board members have a packet that should include these items. And this is also your handout number 2 that you can take away. So these are the things that you're going to want to know: the missions and values and a brief history of the organization. You're going to want to look at the bylaws, the board and applicable organization policies, and what are their expectation of board members? Do our board members expected to donate? Is it a give or get type of situation? Are they expected to attend X number of meetings? And board liability indemnification policy coverage. We talked about that earlier. And board portal instructions. A lot of organizations now are putting their board meeting minutes and information on a portal. And a copy of the last audited or reviewed financial statements, if applicable. And if your organization has not been audited or reviewed, then you want to see the last internal financial statements. And that would include your balance sheet or statement of financial position and your statement of activities. And a copy of the last IRS Form 990 filed. Now, if your organization made less than $50,000 in the year, then they just filed a postcard. So they won't have an actual return. But that Form 990 is a wealth of information. And frankly, when somebody asks me if I want to be on their board, that's the first thing I go look at. I'm going to mute myself again up here. Oops.
Lisa, it looks like you moved your screen a little bit.
Sorry, that didn't work, did it?
No, it didn't, but if you just stretch out your PowerPoint screen again, it should fit.
Hmm. I don't know why the screen moved.
Yeah, it
Can
did. It
you,
looked like.
can you hear me?
Yeah, we can hear you. It just your screen moved. So if you can stretch your PowerPoint, maybe drag the corner again.
Let's see, how do I? Sorry about that. Didn't want to cough in your ears. Okay. So other board items for your organization. Uh, this is the list of things that you want to have. Calendar of the meetings for the year. And when I always encourage board members, put them on your calendar for the whole year. And board and committee members contact listing if you're not going to be able to attend or something, and access to prior meeting minutes and other board items specific to your organization. And board portal instructions. So they should go through an orientation. And I have one client that even though they rotate 3 off every year, they ask me to come back every year because they figure the other 6 still need a refresher. And so you want to make sure that why the board exists, the board's role, explanation of exempt status, review of bylaws and policies. Officers' responsibilities, liability coverage issues, how to read the financial statements and expectations of board members, yes, again, and signature of the annual conflict of interest, and other topics specific to your organization. Okay, so definitely you want to sign and return that every year. And board members' expectations agreement. and a give or get policy, code of ethics, and other expectations. So polling question number 5. When you joined your organization, were you required to sign a conflict of interest policy and disclosure statement? Okay, a lot of you were. That's great. So we are up to a summary of what was covered. So we talked about board basics, roles, responsibilities, and expectations. We talked about governance versus management roles. We talked about how you can effectively use committees to make your board meetings more efficient. And we talked about ways to build a strong board, starting with your recruiting and training and working with management. And so we have some takeaway action items for you. You can complete the provided board member packet checklist for your organization and develop your list of questions on any open items you might have, and refresh yourself on the board bylaws and policies. And I know they can be really long and they can just like hand them to you in a book, but it's like, well, who really sits there and reads them? You kind of want to make sure they go through them with you in the training. And request trainings when needed, because not everything may be clear and each of you may be serving a different industry. There are different requirements if you're in healthcare industries or serving medical things, and you need to be aware of HIPAA and ask questions in the meetings. I'm sorry, I even have prescription cough medicine on board. And enjoy your service, because you are making a difference in the community, and that is so important, and so appreciate your time. Now we have time for questions. And I don't believe I answered everything, so there must be some questions out there.
Feel free to drop them in the chat, or if you can unmute, you're welcome to do that as well. Okay. I mean, I'm not seeing a lot of movement. I think maybe the questions will come afterwards. And in that sense too, Lisa.
Nina, I see your lips moving, but I don't hear you.
Oh,
Oops.
can you hear me now?
Yeah, I can hear
Okay.
you.
So maybe if folks have any questions that bubble up after and when they're looking through the slides and everything afterwards, we can send that over to you if there are any other questions. Do you want to share your slide with your contact information?
Certainly. And of course, there's the usual disclaimer that the lawyers always make you put in. We're not familiar with your particular situation, not giving legal advice here. And there's some wonderful resources here for more information. I mentioned Board Source before. And of course, Arizona Economic Recovery, or Arizona Economic, sorry, Resources has wonderful information on there as well. And this is my information right here. You're welcome
Wonderful.
to email me if you something pops into your head, or you go to a board meeting and you go, oh, wait a minute, somebody said something about that.
Yes, and all of this, again, information will be shared with everybody in the next few days. We'll get the recording up online in our local learning lab at localfirstarizona.com. And what we do there is we make sure to include all of those additional resources as well as these slides so you can poke through, as well as those worksheets. So thank you again, Lisa, for providing us with so much information. And we're getting thank yous in the chat as well. And Lisa, we hope you feel better. We hope your throat feels better soon.
Thank you.
But yeah, we will be sure to follow up with anything. And if questions bubble up, don't hesitate to reach out to either Lisa or us here at the Resource Center.
And thank you, Arizona Economic Resource Center, for providing these. This is great, especially for small communities and rural communities that I like to work with. Yes, thank you.
Wonderful. Well, thank you. And I will let you all go. Enjoy your lunches and we'll be in touch. Thank you so much. Thank you, Lisa.
Bye-bye.